If you're a business owner, listen up. S corporations can help you save thousands of dollars in taxes in 2024. But if you don't know how to properly pay yourself from the entity, not only will you miss out on the savings, but the IRS can require you to pay all those savings back to them. So today, I'm gonna be teaching you all how to properly pay yourself from an S corporation in 2024. So without further ado, let's get into today's episode. What's up, family? Welcome back to another episode of Tax-Free Living, where I teach entrepreneurs just like you how to live tax-free. So we got another phenomenal episode on our hands, family, but y'all know what to do before we do that. All I ask is that you hit that subscribe button. Make sure you subscribe and locked in to the channel, because we have so many gems. We have so many new strategies to talk about in 2024. I don't want you to miss out. All right. So on today's episode, we're going to be talking about how to properly pay yourself from an S corporation. So before we go into that piece, let's start with what is a S corporation, right? So contrary to what most people believe, a S Corp is not an actual entity. Did you know that? An S Corp is not an actual entity. So an S Corp is actually an election status that you can choose to have your business taxed as an S Corp. So there are only two ways to form an S Corp. You can have it, you can form an LLC and then elect to have your LLC taxed as an S Corp, or you can form a C Corp and elect to have your C Corp taxed as an S Corp, right? In my experience, it is better to do an LLC entity first and then have your LLC taxed as a S corporation. So with that being said, well, how do you upgrade your LLC to an S Corp? Or how do you upgrade your C Corp to an S Corp, right? All you have to do is complete form 2553, and you will be able to upgrade your LLC to an S Corp by filling out one form. And again, on the channel, I did a complete walkthrough of how to do that. Now, you're probably asking yourself the question, well, Carter, why on earth do I want to upgrade my LLC to an S Corp anyway? Why do I even, like, what are the benefits of an S corporation? Well, guess what, family? I am glad that you asked, all right? So S Corps help you save thousands of dollars in taxes. Okay, so like contrary to what you've probably been told, LLCs do not help you save money in taxes. S Corps help you save money in taxes. Now, there are three types of taxes that most people pay on their income. That is federal tax, which we can't do nothing about. There is state tax, depending on where you live, but there's also FICA taxes. And FICA taxes is an additional 15.3% on top of federal and state. So S corporations help us minimize our FICA tax bill. How much can we actually save? Well, a properly structured S corporation can help eliminate up to 70% of your self-employment tax bill. If you had a $50,000 self-employment tax bill, which is not hard to have once you start making some money, a S corporation can help you save $37,500. So it is just very, very, very important that you understand how and when to upgrade to an S Corp. And I've done plenty of videos on that. But today I want to teach you how to properly pay yourself from S Corp. With an S corporation, you must, please underline this, you must run payroll for yourself as the owner of the S corporation. All right. So if you're the owner of the S Corp, and you could be the employee too, right? But if you're the owner of the S corporation, it is an absolute must that you pay yourself using a payroll software. Now, what payroll software should you use? I love Gusto. That's my number one recommendation, Gusto. They're not affiliated with this podcast, but I love their software. I love what they do. I've been using them for years. If you want another recommendation, you can use ADP. And my third recommendation probably will be QuickBooks Payroll. So between Gusto, ADP, QuickBooks Payroll. One of the three should be all you need for your payroll service needs. And these softwares are cheap, like $40, $50, $60 a month, but it doesn't matter, because if you have an S Corp and you're the owner, it is an absolute must that you pay yourself a salary using a payroll software. So now that you know you need to pay yourself a salary, the bigger question is how much, right? How much are you required to pay yourself if you have an S corporation and you're the owner of that said S corporation? Well, the IRS guy says that if you have an S Corp and you're the owner, you have to pay what's called a reasonable salary, right? You have to pay yourself what's called a reasonable salary. Now, why do they put this reasonable salary standard into place? Well, let me explain how it works. So if you have an S corporation, the money that you pay yourself via salary is hit with self-employment taxes. Okay, so the salary that you pay yourself is hit with self-employment taxes, but the rest of the money completely avoids self-employment taxes, right? So let's say your business had $100,000 of income, right? And let's say that you paid yourself a $30,000 salary, right? The $30,000 salary would get hit with self-employment taxes, that 15.3%, but the other $70,000 would completely avoid self-employment taxes. So you're only taxed on the salary that you pay yourself. So if you're if you're an opportunist, you probably thinking to yourself, well, wait, Carter, if that's the case, why don't I just not pay myself any salary at all? Right? Why don't I keep my salary at zero? That way, all of my money avoids self-employment taxes. Well, see, people like you are the exact reason why the IRS put the reasonable salary standard in place, because they know if they didn't, everyone with the S Corp would not pay themselves any salary, and all their money would avoid self-employment taxes. So the IRS, a little bit smarter than that, guys. So they require us to pay ourselves a reasonable salary. Now, what is that reasonable salary number? Again, talk to your CPA. But for me, we tell our clients that a reasonable salary at minimum is 30% of the net income from your business, okay? So in that example I just gave with $100,000 in net income, $30,000 would be the minimum reasonable salary that I would recommend anybody pay themselves to still be compliant with IRS standards and to maximize their self-employment tax savings. So 30% is the number. That's my number. You can talk with your CPA, get your own number. Now, it's also important that we talk about the frequency at which you need to pay yourself from your S corporation. My recommendation is that you need to pay yourself at least monthly from your S corporation as a salary. Now, you could technically get away with quarterly, but monthly is better, because here's what happens. Every quarter, your payroll software is going to send your 941s, which is your payroll statement, to the respective state, to the respective state's government, so that they can pay the taxes on your behalf. If you pay yourself every month, then you're always within standard. If you pay yourself quarterly, you might pay yourself after they submit the 941s. And let me tell you something. If your payroll software submits 941s with a zero balance, the state will be coming after you. Okay. So my recommendation is pay it at least monthly, or you can do it weekly, bi-weekly, that's fine. But at a minimum, you need to pay yourself monthly, 30% of the net income from your business, and you'll be compliant. You'll be within reasonable standards, and you will save tens of thousands of dollars in taxes every single year. So if you don't have an S Corp yet and you feel like you need to set one up, please go back on our channel and watch that full S Corp walkthrough video. I hope I know it will be substantially helpful for everybody listening. And let's get these S Corp set up in 2024 so that we can save more all 2024. All right, guys, that's today's episode. So please hit that like button, hit that subscribe button, share this episode with a friend, and I'll see you all next time. Peace.